Why do traders blow their fund accounts even when their trades are actually fine? This trader passed both phases, and then when he went live, he actually blew it. When I sat down with him and went through all his trades, I realized that the trades were not the problem. What killed him, it was the risk management. On a fund account that you have to risk maximum 10%, you have 10% drawdown, the 1% risk on every single trade is 10% on the actual capital of the funded account. A losing streak is not a question of if, it's a question of when. Every trader with a 50 to 60% win rate at some point will have a losing streak of 10 trades in a row. The only thing that he doesn't know is when this will happen. So in this session, we go through step by step the risk management strategies that I use to make sure that when the losing streak happens, I can survive. And also the one entry confirmation that can make him gain more, like having a bigger reward. Let's get into it. What happened?
After passing the 2 phases, everything was okay. In the live account, I can proudly say that I blown the account.
You blow the
Again.
account. Okay, it's okay. We will see what happened. So first of all, share your screen, show me your journal. And
Yes.
secondly, let me know what you did and you passed the phases. Go to the trades that you passed the phase to.
3 trades. I had one winning streak there.
Very good.
1 to 2 all the trades were the same. I have changed nothing in this.
Excellent.
And number 3.
Oh, awesome. Excellent. And where are the trades that you blew up the account?
Okay, then after this I had one losing streak.
Okay.
the previous 2 weeks.
Okay.
To be cancelled here, USD CAD. This was Monday. That was the trade.
The analysis on Monday, it's
not.
Yeah, sometimes we are going against the system and we have to pay for this.
The next trade, this was break even. I exited break even. Here I put my SL into break even.
Yeah.
When I saw this formation,
Actually,
break even.
that's actually a correct execution. Yeah. The next one was take profit.
Yes, take profit.
Excellent. Okay, awesome.
Okay, here we have, yes, I remember this one. It was Euro JPY. I entered here.
Yeah.
I placed my SL when I saw the trade breaking this low. I placed it somewhere here, so I had one loss minus 0.5% in that one. As you can see, stop loss again. This I could enter long, I believe, but it was something about the days. It was Monday and Friday late when I saw this candles here, so I avoided. I said leave it for exit strategy. This was just unfair.
Yeah, this is what we say sometimes about the moving average, that we have our stop loss to be a little bit, it is a little bit above the moving average exponential, but yeah, sometimes it's happening. We have to be prepared and actually, entering in our entry being the exact perfect position of where the price is gonna touch the moving average. That is the best ever entry, but the majority of times it never coming up. For example, in this situation, touching, going down. Yeah, I think it's time we level up a little bit. There are a few things that currently you're at a level that you will understand. All right. So the first thing is the risk management based on based on the funded account that you are using. For example, risk management is a really big subject into trading, and you can understand that. For example, you could have blew the account if you were using, for example, like bigger risk per trade, or you could have, for example, save the account and you could use it till now if you could, for example, use less risk per trade. So currently, the main thing is that you understand what you are doing. And currently, you just learned how your losing streak can be created. So if you're trading for the last 5 months and you 6 months and you have 100 trades, you're gonna lose 40 trades. But you don't know how many in the row you're gonna lose. So that's that's actually the advantage that the funding prop firms they have. If a trader has, let's say, 50% win rate, he's gonna lose in the let's say average 6 months 50 trades out of 100. So if he's using, for example, 1% risk, he's gonna blow up the account. This is inevitable. Okay, and the prop firms they know that. The problem is that the trader he cannot take into consideration, he doesn't want to take into consideration that he's gonna have a losing strike of 10 trades in a row. He's gonna say, come on, man, I'm not gonna lose 10 trades in a row because I haven't till now. But you haven't till now because you are trading, for example, for like 4 months, right? What happened now is good. And why is good? Because you understand the uncertainty of trading. And you have to understand that the risk management, it has to be placed based on your previous data. If you, for example, apart from the break even, you lost 8 trades in a row. Okay?
Correct.
So you cannot survive if you are risking 1% per trade. I totally understand that I'm gonna have a losing streak and I don't know when this will appear or when I will, for example, win the next trade. If you're trading in your money, this is different. But if you're trading, for example, in the prop firms, you have to be truly aware of the worst case scenario. And the worst case scenario is now in front of you. And it's like 10 trades in a row that you lost. And actually, it's not the worst one. Maybe it will be 15. You don't know. And after that, you'll have 10 trades in a row that they will be winning trades. So
as I had before, because before I had also winning streak, like a seven trades in a row.
Exactly, but when we are winning, the traders, we don't actually understand, or we are not fully aware that the opposite can happen. The opposite, that is, for example, I can lose seven trades in a row, and I can lose 7% of my account. 7% of your account, you're almost dead, because there the emotion hits you, the stress hits you. Because you have maybe 1, 2, 3% left, so you have to risk a lot because you have to do double the work. You needed 8% for the, let's say, for the phase 1 or 5%, and now you have to do 8%, 7% more to go at least in break even. So all this emotion hit you, and you have to be really experienced to overcome this. To become very experienced, you have to be logical. So the first thing that I want you to learn is to be aware of the uncertainty. It doesn't mean that you are a bad trader. No, you're not a bad trader. You're a really good trader. The only thing is that 1% is super huge because your total account is, if you are risking 1,000, your total account is 10,000. But prop firms, they don't want you to understand that. This is why they're giving you these strict rules. This is why they're giving you the high leverage, the leverage of 1 out of 100 to use it in 100K account. But your total account, if you consider it, is 10,000. Is that correct? Is the 10% drawdown the total drawdown?
Yes.
So imagine that in every single trade, you are risking 1,000. So 10% of your account. So you are playing 10 times more. You got me? So
yes,
the only thing that you have to consider is, if I play and risking 1%, 1,000 out of 10,000 that I have, how much am I risking if I lose 5 trades in a row? Half of my account. But if I'm risking 0.5% of my account, I have 20 trades in a row that never, for example, happened till now, because currently you have to change. You have to think that I have to play like how all the other traders think. I'll have to think the opposite, because it's statistics, it's mathematics, it's possibilities. If you are risking 0.5% every single trade, you need 20 trades in a row to lose the account. And again, you will tell me, yeah, but I'm gonna gain 1%, and if I'm risking 1%, I'm gonna gain 2%. So the third thing is we can add one more confirmation that I'm gonna show you right now that will make our return on investment, or the reward against the risk, even bigger. That means that I'm gonna gain much more. Let's say 1 out of 4. I'm gonna risk 0.5, but I'm gonna like gain 2%. That means that it will be much like harder for me to wait for the price to hit my take profit, because if I'm risking 50 pips, now currently I need 200. So the emotional state and the stress is getting into. But it is something that is happening. And how we know that this is happening? Because of the data. What are the data? For example, I'm gonna show you this as an example. This is the NZD-CHF, and after that I'm gonna show you more. So currently, the only thing that you are using is this. I'm waiting for the price to break up. The moving average is here. So I'm waiting for the price to come here above the moving average and go up. So this is the...
Or to be aligned.
Exactly. So this is the 0, 1, waiting for 2, and coming 3. Is that correct? Yes.
Yes.
But the majority of your trades in your journal showed that by using this, even for the NZD-CHF, can you see? This is the 0, this is the, let's say, 1, this is the 2, that is the best like case scenario, or whatever, this, 3, and going down. So what if we add one more movement to be sure? Yeah, but Panos, how do we know that the market will come? The market always comes. For example, this is the high and this is the low. This is 0. This is 1. Why this is 1? Because it just broke the highs and it's coming back to 2. Okay? We're not buying this. We are not buying this, you see? We're not buying this. Why? Because we are not sure. Why we're not sure? We need one more. We need one more high. So this is the 3. And we're waiting for the best entry, that is, the lower it can come, retesting, the better it is. 4 to 5. The 4 to 5 is always twice bigger than 1 to 2. Twice bigger. So the same thing happened here. Check. So this is the lows, this is the highs. So here is the 0, and we're waiting what the price will do. So this is 2. We are waiting now for the 2 to 3. We are not selling, we're waiting. Why? Because we need one more low. This is the low. So that was the 3 here. Let me put this here. And we are waiting for the 4, okay? Here.
Okay.
Okay? So we need it a little bit above moving average. So don't put it here or here, okay? Because you are going to take all the movement. If this is correct, you can take the best entry possible, okay? So you need it a little bit above. So the more we're zooming in, okay, as we did in the beginning, the more we're zooming in, for example, here, the less the win rate we have. But what can we do in this situation? We can use the exits better, the exit strategy. So for me, what works better is firstly, understand how many trades I can lose by using this strategy. If I'm risking 0.5% in a fund account, I can lose like 20 trades in a row to blow the account. So this has happened? Never. So out of 170, it's around 180 trades, still my win rate is 63%. Even with stupid mistakes. How? By analyzing the best entry scenarios and understanding how can I keep the trade more. How can I keep the trade more? For example, in NZDCHF, I understood that if the price breaks above, I have like huge potentiality for the bigger time frames for the market to move. Maybe I was wrong, but what if I was right? I would have gained 3 times, 4 times more. So for example, this trade, I just lost this trade. Why? First of all, I broke my system. I gave this trade on Monday. So I saw higher highs, waiting for the best entry above the moving average. This, it was a never a higher high. So the price broke. And then almost a same high, but I think it's lower high. And it broke again. The first pullback that the price will make, I'm gonna use that. Why? Because the price moved down from 0 to 1. It broke one low, came back, it didn't create a higher high, break again the previous low and created a lower low. So this is the 2 to 3. I'm waiting the 4 to 5. And I'm gonna take as much as I can. 3 to 4 times more than I lost. This is mathematically how can I deal with the losing strikes. But firstly, I have to understand that with 1% risk, I'm risking the 10% of my total account in every single trade. If you have $10,000 into your account, would you risk 1,000 per trade? Probably not.
No.
You would risk 3%, 2%, 4%, maybe 5%, $500, correct?
Correct.
Yeah. So you're over risking sometimes. You have to understand that. And after that, stick to one pair. Okay, why I lost this pair? Because of this reason. It's okay. Now I have a lot of space to take for the opposite direction. The only thing that matters is where the price will come as the best case scenario to drop. All right? So stick to one trade. Stick to one clear trade. The other one is noise. You got what I say?
I got the only because I analyzed also all these trades alone maybe 2-3 times, all from the beginning of the phase one until the end of the live account.
Mhm.
The one I said is okay. I had maybe 3 break of my system, the rules of my system. The other one was about the risk management, which I said, look, you fucked up because you were in a losing streak. I don't believe that the trades were very wrong. I don't know what's your opinion.
No, the trades are not
I
they're not wrong because you're following the trend. So while you're following the trend, you cannot be wrong. Sometimes um, we are losing trades and we are looking into what we did wrong, so we will not do it again. That's not true. That's not correct, actually. Why? Because we're gonna make mistakes, of course, and we're gonna lose trades. That means that not that doesn't mean that necessarily we are wrong, but that means that we
Correct.
have to take the system into consideration. What do I mean by saying that? You cannot over risk when you are, for example, trade 4 times, 5 times per week because your exposure is high. So 10% from your account that the prop firm allows you to use per trade is super high. So you have to correct the system. You cannot over risk and over
I,
trade. You can over risk
I thought
and take 2 trades per, I don't know, like per year.
I thought that would be better management if I had reduced the risk to 0.5 when I was minus 5%, for example, or minus 4%, which, to be honest, I was thinking, but you know, my emotions is about the risk, but I had in my mind to start reducing the risk if I saw the losing streak, for example, because all the beginning was okay with 1%. I had good, clear state of mind. I had losing trades, I had winning trades. I passed the phases in good time, but when I saw the losing streak, I I should reduce the risk. So
Okay, I'm gonna tell
the
you.
plan in my mind was to reduce the risk when I
Yeah.
start seeing a losing streak.
Let me teach you 2 things, okay? So the first thing that I do is, firstly, when I'm into phases, I'm using 1% risk. I'm trying to understand that the less trades that I take, the better it is, because I'm waiting for the best entry scenario. For example, I'm looking for a new breakout. Let's say that the price is in ultimate highs, and I'm waiting for a breakout, retest, and another breakout. So I'm trying to take the 4 to 5 movement out of 1 out of 3 to 4 RR with 1% risk. So I'm waiting for this case scenario. The other thing is, if I want to see, for example, I see another pullback or retest into the trend, I'm risking 0.5%. But maybe this trade is not the perfect under our confirmation trade. So I'm risking 0.5% and I'm closing the trade out of 1 to 2 RR. Okay? For example, in the account management.
So the first move you enter to the alteration of the trend is 1%, and the continuation of the trend you're placing your trade to 0.5%.
Yes, but into the to for me to totally confirm that the trend switched from an uptrend to downtrend, I need the 4 to 5 movement. That means that I need 2 low to be broken.
Yes.
2 lows, not
Too
one.
low.
If you check into your journal, you're waiting only
Yes.
one high or low.
The first. Correct. Yes. Yes.
That means that you have a high probability for the trade to break, retest, go a little up, do not hit your take profit, and continue moving because it is retesting or making a pullback into a higher time frame. So the first thing that I do is this. Secondly, you're playing into 100K account. I'm not into one account. You know, I have 2 accounts. I think that this is a really good strategy. For example, I'm trading into one 100K account 1 week. So I'm losing 2 trades. I'm leaving it. The next week, I'm trading into the other account. I'm losing 2 trades. I'm leaving it. The third week, I'm going back. I'm losing 2 trades. I'm leaving it. So currently, you would have both of the accounts. Maybe 4 to 5% drawdown, maybe, I don't know, a little more or a little less, but you would have both of the accounts because you are putting all your eggs into the same basket. So take 2 accounts, trade in both of them, but week per week, because losing streak will come again. For example, this month I lost 5 out of 6 trades. Thank God that I won like a really big return on investment reward. Otherwise, I would be a totally loser. A losing streak will come and will always come. And when it hits you, emotions will hit you as well. So these are the 2 main things that I consider you to do.
I understood. I will think about the 2 parallel accounts, but
Yeah. And also
playing
the other thing.
separate weeks.
And also the other thing that I told you in the beginning. I have the recordings. If you want, I can send them to you. If you wanna, listen again what we said.
Yes, I would like, if possible, to send me the recording.
Yeah.
I
I'm
would like
sending
to have
you
it.
both of the recordings. Do you have any questions?
No, not any specific question. I'm waiting now. I don't know if I buy a new account this week or the next week. I said, yeah, I will make one break to clear my mind because Eastern also time now. I said, oh, we'll come back with clear state of mind.
This is a cost that we have to pay to be traders. It's okay. You're still into the learning process, so don't worry. All right?
Yes. So in conclusion, I just have to wait more for the 3 to 4 move
4 to
in order
5.
to be
Yes.
yes 4 to 5 in order to be an A plus plus setup.
For me, that confirms that the trend, the 90% of the times, 85% of the times, but the possibility is high that the trend is switching, and also that you are gonna gain much bigger move. This is what the statistics say. I can show you if you want. But if you are, for example, what you used to do is not wrong, but you have lower win rate because you are over trading, because what you see it's happening all the time, and you are going into looking for trades that they're changing, they're switching the trend. So one just breakout and retest, it's not enough. You need one more. So you got me. So risk less. Maybe you got it, but risk less because it's more dangerous. So currently in this lesson, it's the best thing that you could ever experience because this is something that you had to learn. I learned that by super hard way. So I'm telling you, this is something really good. You're understanding the uncertainty and the possibilities and the risk. It's super important.